All right, good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, so what are we doing? Well, we're testing the 9-day again. Okay, the question going into today is, are the bears going to do anything about it? Or is the 9-day going to hold like it did here, and here, and here? Basically everywhere, as soon, after the 20 held here and here, it flirted with the 9-day for a while, but it kept holding. Now listen, if the bears can convert that, they can get back down into the daily mid-band, back down into the 20. And if they can turn that into resistance, unlike here, they can turn this back into a sell rallies market. If not, well, the if not's pretty simple. We just keep drifting back to the upside. And people that want to short every day and fight price get annoyed. Friday was actually a nice little tape. We were short, really nice short. Then we were in a nice long from 41, and then we shorted 55 into the close. And for me, I don't hold over the weekend. I don't do it. So we took it off right before 5 o'clock. But that would still be a pretty nice looking short if we had held on to that. But I don't mess around with first of all, I don't mess around with weekend risk. I don't like gap up and gap down. And with that stupid balloon flying around, there was no way I was going to do that this weekend. Just because you don't need to unwind a bunch of good handles by getting caught on the wrong side of some kind of a gap on a Sunday night. It's not worth it. So the bears are doing their job. I mean, they established a lower high here. They're pushing back into the 9-day, but this is where the rubber meets the road. They need to actually convert something. So hourly chart, you can see your new weekly pivots 41.20.67. You see the 9-day down there, 40.97 and change. Back to the pre-FOMC price down at 40.73. We're not asking the world of the bears if they're going to have a successful week. If the bears are going to have a successful week, they have got to take out the Fed reaction low down at like 40.48.5, and ideally close below it. If they don't, well, then this whole thing just looks like a higher low versus that area, and then it drifts back up to challenge this high from Friday, and then potentially 42.08.5. There's still plenty wrong in the world, but the problem is, the bears look great for a very short period of time, and then the dip buyers come in to push it back up, and the shorts are just too weak to do anything about it. There's no commitment right now on the short side. I mean, if the price action of the last few weeks doesn't tell you that, then you don't know what you're looking at. There's very little commitment on the short side. Because every time we get up to 4200s, the bulls look terrible. Every time. Every time. What are the bears doing about it? Nothing. There isn't a hint of panic in this tape. There isn't a hint of trying to flush anybody out of anything. But if the bears can stay below the hourly mid-band, which right now is like 33 and change, convert the weekly pivot, convert the 9-day, convert the reaction low, then, at least it'll, the week longs will be wondering whether this is a good idea. And you end up with more of a two-sided tape, and you probably get a full-on test of the green line here, the 20-day, which is the line that the damn thing needs to test anyway. So we've talked for over 10 years now on this webcast about how the S&P 500 futures like to trade. They like to trade between the Bollinger Bands. Upper band, middle band, lower band, middle band, upper band, on and on and on. We just spent plenty of time at the upper band. We did upper band, middle band, and when they couldn't take this out, the bears were pretty much doomed for this next run to the upside after they lost this consolidation area. We haven't touched the lower band since, survey says, December 22nd. So, it's not a super long time, but it's a situation where, as a function of time or as a function of price, it needs to happen. But nothing's going to happen if you can't deal with this. And don't think you can't go a long period of time without touching the lower band. I mean, you back in, 2012, 2013, 2014, it would just bounce between the upper band and the middle band for months. That's not this environment. And all the bears really need to do is have some commitment to lower prices after they knock it down. Knock it down and hold it down. And then you'll get that next wave that, everybody just sits around Twitter bitching and moaning about all the time. You want to take the market down, that's how you do it. If you don't, you're going to get more of the same. More of the same. So, that's my little pep talk for the short side this morning. If they actually want to get something done, that's the avenue to do it. Otherwise, we go back to 42s. But again, I stress, the bulls do not look good at all above 4,200. They're not prepared to sustain price up there. So it's either going to be this kind of a back and forth tape or a back and forth tape that's doing much bigger swings, and we're consolidating somewhere down around all of these moving averages, beginning with the 20-day down at like 40.54. All right, so for the very short term, you got volume weighted average price 41.26. That's sitting right above weekly pivot 41.20, basically 41.21. Proprietary moving average 14.5. So 26 to 14 is going to be a thing off the open. Bears want to keep it below 33, and they want to break that 41.06 overnight low. Globex range has been nice. It's been 36, almost 37 handles. So the volatility is still there. What do the bulls want to do? Convert 34. Try to claw their way back above 50. But not going to lie, it feels heavy today. I think the bears have a decent opportunity if they can press off the open. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow.